What's going on, guys? Welcome back to another video. So in this one, as you guys saw in the title, we're going to be talking about how retail investors sold stocks in the second largest amount over the last 5 years last week. So there's a lot of key implications to this here, especially after we've seen the market significantly bounce off of the lows that we were seeing last week. And it really leads us into kind of the psychological and emotional strength that you need to have when you are participating in the stock market. Whether you're a long-term investor, a day trader, a swing trader, anything, you need to be operating under a very, very specific mindset and being able to leave your emotions at the door. So we're going to go over this data and what this means for us going forward. And again, before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it helps us out a whole lot getting this information out to as many people who actually want to learn. And again, if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into it here and take a look at the price action that we were seeing over the last week. Now, going back to the 13th of September on the 4-hour time frame here, you see that the overall market, the SP 500 ETF, was trading right around 415. Now, we then saw a very significant drop, making new lows all the way down to around 356. Now, again, when we're taking a look at what has happened in the overall equity market, well, we're going to talk about this in a second, but there was a time and a place where the Fed was essentially signaling to you and screaming at you to get out of the market, and they even did it themselves. So when we come over and take a look at this data right here, weekly retail order flow, last week was the second largest selling week in the last 5 years. Now, why might this have been? Again, well, going into the emotional aspect of this, we can take a look at what the VIX, the overall volatility index, or sometimes known as the fear index, how was that trading over the last couple of weeks here too? Well, looking at the VIX, we saw it was bottoming out right around 22 and breached that key $30 level here, peaking at around $34.87. Now, when we come over here, as a rule of thumb, VIX values greater than 30 are generally linked to large volatility resulting from increased uncertainty, risk, and investors' fear. So any selling that was done at these lows, again, was a move based off of fear. Now, going back to the statement that we just made that there was a time and a place, when you come back to this article right here on November 24th, 2021, Fed members ready to raise interest rates if inflation continues to run high, meeting minutes show. We were also getting the announce of the tapering. You eventually saw the Fed members were actually selling off assets as well. And going back and taking a look at what the prices of these equities were trading at, if we put this on the weekly time frame here, well, it's right around this range right here, and you saw the SPY was at around 460, 465. If you ended up getting out of your position there, yeah, you missed out on another $20 move to the upside just on the SPY here, but you would have saved yourself from this very significant downturn here. Now, I know hindsight is 2020. You can't look back at these charts and give yourself an understanding of, oh, I wish I could have done this at that time, but what you can look at now is, well, if we're breaching new market lows, is that the best time to be selling long-term positions? Well, in my opinion, absolutely not. It's a move based out of fear, but it's also not the best time to be buying stocks either. Remember, we've been talking about this a lot, that we are waiting for that light at the end of the tunnel to show up. Now, looking at the fear and greed index over here as well, you can see that 1 week ago, the CNN Business Fear and Greed Index was showing extreme fear. Now, again, after retail investors, as you guys can see here, had the second largest selling week in the last 5 years, well, what happened to the market? If you look at this on that 4-hour time frame, we are up, let's see from these lows here, let's give an actual percentage. We are up about 5.98%, almost 6% on the SPY from those lows. So retail sold, institutions bought the dip, and now retail is kind of left holding their bags, hoping that the market's going to go lower in order for them to be able to buy more shares of the stocks that they like over the long term. Now, again, I know some of you guys might be new to the market, and it's definitely going to be a hard thing to be able to manage these emotions because it is your hard-earned money going out in the market. But again, you have to be able to put your emotions to the side, leave them at the door when you are participating in any market. Why do you guys think that our proprietary trading algorithms, Trader Joe and Pythagoras, are able to have so much success? they don't have any emotions. They go in, they follow their rules, they buy and sell accordingly. If they get stopped out, they get stopped out. And if they need to, they will take very, very significant profits and stack up those base hit gains. Now, that's more on the day and swing trading side of things, but for long-term positions here, how would we expect to start to really see that the market is going to turn around to the upside? Now, right now, personally, this looks like a pretty significant relief bounce. Again, a lot of people are expecting the Fed to pivot. Personally, I don't necessarily agree with this. We made a video about this earlier, but you need to see that light at the end of the tunnel. Inflation coming back down, the job market kind of loosening up, and you need to see growth getting back to these normal levels. This volatility is most likely here to stay for now, and depending on how old you are, what your risk tolerance is, now could be a good time to start dripping money back into the market, but you're going to have to make that decision for yourself. But again, any decision that you're going to be making, you have to stick to it. If you start willy-nilly trying to buy stocks for the long term and then they go against you and then you sell them and then they go back up and you're wishy-washy all back and forth, that is going to lead you into not a great place in your portfolio. If you make a decision, stick to it and continue on the path and the rules that you have set out for yourself and act like one of those bots or algorithms. And again, if you guys do want access to those tools, those algorithms that we do have that trade by themselves and alert you guys to those tools every single day, make sure you guys check out that link down below. But again, that is going to wrap up this update here. Again, really, guys, you got to leave your emotions at the door. It's a tough thing to do, but it is something that you have to learn in order to have success in this market. So that's going to wrap it up for this one, guys. I'll see you in the next one. Peace.